Hello and welcome to the Amber Stitt Show. I am your host, Amber Stitt, and today I welcome my friend and colleague, Kelly from Steadfast Insurance Agency, and she is a long-term care insurance specialist. And so I'm so excited to have you here, Kelly, for Long-Term Care Awareness Month. So welcome and thank you for being on the show.
Hey, Amber. Thanks so much for having me. Stoked to talk about it.
Yeah, so we've been kind of planning this episode since the summer, maybe quarter two even, after meeting each other at a insurance conference. And it's always fun to meet people with as much energy and excitement about insurance planning as myself. So felt like we were kindred spirits, or I don't know what you would call us, but I'm so excited that we can bring some awareness to the audience, the Pathways audience, but also hopefully motivate people to take some action today and really start thinking about long-term care planning differently. So I think we should kick off this podcast sharing a little bit about you, your story. You have some tenure in the business. And I know that long-term care is not the only thing you do. So let's talk a little bit about you, your team, and a little bit of the history behind Kelly.
Yeah. Well, thanks, Amber. Well, as you did say, I am a long-term care insurance specialist. So what does that mean? I help people plan for extended care so that they can live well. And how I do that is insurance is a part of that conversation and part of that solution oftentimes, but it's even more so a comprehensive conversation that I have with my clients and their advisors. So helping them to think through, where do they want to receive care? How are they going to pay for care? And who's going to provide that care? And then the insurance is often the solution for the funding, right? This is what's going to pay for your care. It's an effective way to pay for your care because of the leverage and the other benefits and services that are included, which I'm sure we'll talk about later. So that is what I focus on in our business. And my husband and I, Adam, we do have an independent insurance agency just outside of Columbus in Westerville, Ohio. I do work nationwide and working alongside financial planners, CPAs, estate planners and their clients, and then obviously clients one-on-one and helping them plan. So why do I do this? You know, it's really a thrilling industry, right? Not many people think that. I love this industry because it's very near and dear to my heart because I've had a lot of personal experience with extended care in my family. Yeah. All of my grandparents needed care. Nobody had a plan. Nobody had insurance. Very, very difficult. I even helped my grandmother, helped her with care for a couple of years, part-time. Personally, yes. Okay. And so at first, I wouldn't have even considered myself a caregiver. I was taking her to the grocery, taking her to doctor's appointments, getting her hair done, getting those rollers set. Yes. But it really evolved over a couple of years where it ended up being more than just her driver, more than just her companion. Yeah. It was even helping prepare some meals. And then it came to a point where it was, I needed to help her shower. And it came to that point when I had a conversation with my parents. This has gone too far. Like, Mama cannot stay safely at her home the way she is. Right. We need to bring in help, or she needs to move to maybe an assisted living facility. So it's not so much that people don't want to do this. It's a capacity issue and it's a safety issue too. Absolutely. Right. As her granddaughter, I was still working full time at that point. Fortunately, I was in a different family business at that time. I was working with my dad in the car industry. And so I had flexibility in my day to be able to do that, thankfully. But I was giving up time. And I was, there definitely is a physical component of that. And then when it came to actually showering, oh my goodness, I was not capable of safely doing that. I had no training or experience in how to bathe a grown person. I mean, I have kids. At the time I didn't, but bathing a grown person that, you can't just pick up, like you can a toddler or a baby. It really is a skill that you need to know how to properly do. So because of that, and then just other family experience, seeing really the devastation and the consequences it caused physically, mentally, emotionally, and financially, I didn't know there was a better way until I really came into the insurance industry, where I realized there is a better way. We can not only provide insurance solutions, but we can actually have family conversations. with our loved ones.
And I love the conversation aspect. I think my husband, even just talking about some of the planning for us in our 40s, I think it's a natural thing to shut down and just say we can figure it out later. And I don't know what that is about, but my fundamentals with the Pathways steps, I want people to take action proactively so that you can make some really nice choices and really see what the options are. And it'll feel so good and have less stress when we are facing things. Because Kelly, you work with a lot of clients. You know things happen.
For sure.
You've seen evidence of that.
Right. Oh, absolutely. That's the goal, Amber, is to do proactive planning so that you're able to stay in control of your care options. You're reducing burdens on family, physically, mentally, emotionally, right? Financially. And you can live better. You can live well. Your family can live well because you've had these conversations. You've done planning. Now, does that mean it's going to be easy when it comes to the time of needing care? No. But will it be easier? Yes. Because you've had these conversations, you have a plan in mind, you've considered options, and so you have a go-to plan of, okay, if this happens, this is what we're going to do, or this is ideal. We may have to pivot and change, right? But you have a good baseline, and that's going to provide enormous value to your family.
It's almost like, I call it like doing a fire drill early. So then when we're in this fight or flight moment of stress, things are going on, we can just be very surgical. And I've had friends laugh at me like, wow, that's kind of cold. But if we can be surgical and methodical because we've gone through the steps and we know where things are online, virtually, or who to contact. Right. Can you imagine just being there for the people that need you and just being the right mindset for them? So it's very interesting because this is a thing that we all know. We all are going to live up to a certain point where there's just so many factors that can affect our health, but we might be living a long time. And what's exciting though is, I've been in the industry for 10 years. I think, are you close to that? Longer?
So I'm almost 4, so not as long. Yeah.
Okay. Cause I know the family business, so the business ownership, that's right. Okay. So, but we have so many options now. It is so awesome that we can really cover, how, if there is care to be received, how do you want to do it? And then there's different writers and different vehicles now. And it wasn't always like that.
No, I'd say in the last 5 years, especially, we have fewer carriers, but we have more options. More options than ever before. You're right. So we can really sit down with clients and tailor a policy, tailor a plan to them, exactly what they need, what's going to fit their health, their family, their finances, their preferences, to be able to come up with a plan that's going to work for them.
Yep. So I'm going to let you dig into that a little bit, but I know that I've been studying this a lot and working with, like you mentioned, there's a bunch of carriers that we go to for multiple solutions, but then there's a narrowed down list. And then there's some specifics. There's some specific contracts that can also work with the upcoming legislation. And on the podcast, I'll be talking about that a little bit more, but there are some ways to also participate in exemptions for some of these state mandated forced coverages that are very limited. And so I know that you can give people access to multiple solutions in that regard as well. So we'll talk about that a little bit more. It'll kind of cover itself as you go through some of the fundamentals. So, should we start with just kind of the basic mechanics of long-term care insurance?
Yeah. Well, I think even before we talk about the insurance, let's define what does long-term care even mean, okay?
Sure.
So long-term care in of itself, also known as extended care. I think when people think long-term care, what is the first thought you have when you think long-term care?
What do you think? Nursing home.
Right. And that's the number one answer that I get. People think nursing home, when in fact, that is not where most people receive care, but that's what people think. So really using the word extended care kind of gets away from that nursing home visual. But what long-term care, extended care really is if you need help throughout the day to do those daily activities of living, okay, transferring, toileting, bathing, dressing, eating, and continence, or if you need supervision due to a cognitive impairment, guess what? you need extended care. And typically that's going to mean more than 90 days, okay? More than 3 months. Okay. At that point, it is extended care. And so typically what we see in the United States is family members are providing this informally. So they don't have training necessarily. They don't necessarily have the experience, but they are doing this unpaid informally for family members. Okay. Yeah. And what happens when families do that? Like in my family, what happens? Well, there's a tremendous amount of stress on the spouse because typically the spouse is the one that is providing the care physically, right? They're helping them move from one chair to another, or maybe they're helping them in the restroom or bathing, right? So usually the spouse, maybe it's adult kids that are coming into the situation as well. So that's really what long-term care, extended care is referring to. And I will say most Americans in their lifetime are going to need some form of LTC, of long-term care, okay? Now, statistically, we look at, well, how many people could actually go on claim with their insurance? And statistically, it's about 50%. It's like 52% of people would be able to trigger their LTC policy to collect benefits. Now, what are these triggers? What is LTC insurance? If you need help with 2 out of those 6 activities of daily living that I said, transferring, toileting, bathing, dressing, eating, incontinence, or you need supervision due to a cognitive impairment, okay, and your expected need of care is to be more than 90 days, then you can trigger your policy. That's what's going to trigger a qualified long-term care insurance policy. So that is in essence really the baseline of triggering a policy. But what does a policy do? Well, certainly it's going to provide money, right? It's going to provide funds to be able to pay for that care, really, so that your family doesn't have to. That is the key. We want to protect our family and we want to protect our finances. So how can we do that? Well, if we have money, a designated bucket of money to be able to pay for care, hire professionals that are trained to do this. Now, maybe family is still involved to some capacity, but if you have regular care coming in so your family doesn't have to do it full time, that's going to relieve burden. Okay, so that insurance is going to help fund that care. It's also probably going to have other benefits included. Things like care coordination. That's one of my favorite things that LTC insurance has, where basically you have a service, you have a phone number to call to help coordinate services. So if you need home care, if you need facility care, you're trying to get together a plan of care, this service is going to help you do that. So
it's like a concierge. I mean, you can't rely on your family members to find all the solutions for what you might need, and the expert. Yeah, so
that's right. So your family doesn't have to go to Google to figure out, okay, local home care agencies, and then looking at Angie's List and Google reviews and all these things. You, like your insurance company that you have a policy with, they will have preferred like top-notch providers in your area that are reputable and say, you know what, we recommend these agencies. I would recommend calling these agencies and getting together these details to relieve stress on your loved ones. And we even have some carriers that actually have like a concierge care coordination, which basically means you have one point person.
Okay.
So it's not just a team of people. You've got one person that your family is talking to throughout the whole claim. So you're not having to rehash that story over and over again.
That's huge. I mean, because I know people, even if you don't have chronic conditions, when you have to go repeat your story to one doctor over the other just to get a prescription. And if you have, I mean, if there's a high stressful situation, having to go through and repeat that would feel just...
It's exasperating.
Crazy. Yeah.
Yeah. Oh, it is. It's exhausting and exasperating and very stressful. So that's a really great benefit of having a policy. And then other things like they provide respite care, probably, home modifications, caregiver training. So many policies have these other benefits and services that come with your policy outside of just a bucket of money. So I would say most of my clients probably could actually self-fund their care. Okay. If they were to have maybe a 2-year need of care, they probably could self-fund. They could use their own money to fund their care, but they're choosing a policy because of the leverage, Right?
Okay.
It's the idea of you put $1 in, you get a multiple of dollars back, just like with home insurance, auto insurance, right? It's the same idea. You're putting a little in to get a lot out. And so you're putting that in to get this leverage, but then you're transferring the risk and the consequences really to the insurance company, right? That's what the insurance is supposed to do. And then you have these other services as well. So, and I think the idea of even how much care could you possibly need? I often get asked that question. Well, Kelly, like what's a typical LTC claim, or how much care do people actually need, right? What should we expect?
Because you still have these benefit periods. And I know one product has continuous. And so it's always that question, do I really need it for that long? Yet people could be demented for 10 years. So what do you think about that?
Yeah. So we have carriers that provide benefit periods from 2 years all the way up to what you're calling, really it's lifetime benefits is what we call it. So yes, if you have a small claim, 2-year period and you just want a little bit, but you want meaningful coverage, we can do a 2-year benefit period. And then another carrier will provide lifetime benefits. So all in between. Typically, my clients that are looking at lifetime benefits are people that have cognitive issues in their family. So, dementia, Alzheimer's, Parkinson's, it's very real to them. And they're very concerned about that true catastrophic event. So they want that long period of time. But even, if we look at how much care do people need, it is all over the board, Amber, right? I mean,
some people are probably a little more simple. I would say I'm not one of those people. I might need quite a few things just in general. So imagine if I had medical issues.
Right. And and that's what makes planning so challenging is we don't know. We don't have the answer. If we did, it would make planning so much easier. If we had that magic 8 ball to know, okay, I'm going to need care for 2 years and 4 months, right? Okay, perfect. I'm going to get a policy or I'm going to, have a separate bucket of money for that. But we don't know. So what we see is that most people are going to need some form of care, right? That could be 3 months. That could be 10, 15 years, right? It could be in between. But typically, we're looking really at like 3 to 5 years of some form of care. Now, women are typically going to need more care. And why is that? Why do women need more care generally? Well, number one, we are generally the caregivers first. So we are typically taking care of our spouses, our partners, other loved ones. It could even be parents.
Sure.
And that has a significant toll on our health, physically, mentally, and emotionally. So it takes a toll on us. And I've seen this many times in my family. So it's very difficult. There's a huge caregiver burnout. So we see women often needing more care and for longer.
I thought you were going to lead with the fact that we live longer, cause more trouble, and we live longer. No,
that's right.
You're saying
it's both.
The first might come prior, and there could be because I don't have the statistics. I'm sure you have it somewhere in your wheelhouse, or even you might even remember. But there's a certain percentage that causes just chronic illnesses, even down. Well, there's a statistic I remember learning from a nonprofit that even children can have chronic illnesses from the stress in a home. So I can't even imagine what a caregiver could have. And so that's what I think you're talking about is that.
Exactly. Yeah. Yeah. There's a caregiver burnout. And so, that's going to happen even before women need the care because they're caring for someone else. And takes a toll on women. Now, also, women do typically live longer and we typically have more chronic illnesses versus men are more likely to have those acute issues. So maybe it's a heart attack or something like that. So that's more acute versus women, maybe over time, just simply as we age, we are having mobility issues. We are slowing down. Our bodies are more fragile and we're not as strong and we're moving more slowly. And so that takes its toll. So typically we are seeing women on claim longer and more often than men.
Okay.
So what is that even when we're looking at rates of long-term care insurance, what does that do to rates? Well, the insurance companies, they know this. They know this data, right? That women are on claim longer and they go on, generally it can even be more catastrophic. So rates are higher for women. We pay more in our insurance premiums than men do. So that is, another reason to consider this when you're younger and when you're healthier, because it's going to be less expensive and you're going to have more options.
Okay. So I think with your initial just meeting with people and you have a husband and wife, I think men might have a different mental picture of how this would look than the female. Given everything you just said, is it hard to get spouses and partners on the same page? Because it's a different story. Men might say, I have life insurance, I'm good. Where a female will say, look, I want you on my plan, but we got to do this together.
Right.
But I need more. We need to build this out for the possibility of needing more. Is that a real scenario for you?
Absolutely. Yeah. I mean, women are typically the ones that are driving this conversation, that are pushing for the coverage because they might be the caregiver right now to a parent, or they've experienced it, or they see their friends doing this and they're thinking, oh my goodness, I'm more likely to need care and for longer. So we need protection. We need a plan. We need to talk about this. And men, women are thinking about the consequences. And men are like, oh, it's not going to happen. We're going to be fine. I'm just going to
that financial component saying, no,
right.
budget.
That's right. Or they're thinking, oh, I'll just die in my sleep. I'll have that heart attack. And then you're going to have this bucket of money for my life insurance. And women come into like, no, honey, like, no, but seriously, remember, like, how I'm caring for my mom right now, right? What happens?
Did you know my husband, Kelly?
Right.
I feel like you talked to him because I think I've had that conversation a few years back.
Right. And so, so really we are approaching the conversation. There's really two different angles. It's one, personal experience, and the other angle is longevity. So typically the men might identify with longevity. Do you have family members that typically live a long life? Like, can you see in your family, do people live in their 80s and their 90s? And if they have that longevity, oh, well, yeah, my dad's 85, Okay, well, they can typically relate to that a little bit more, whereas the women are looking at that personal experience and they're thinking, oh my goodness, this is so hard. I don't want this to happen. I don't want to burden our kids, right? If both husband and wife need care at the same time, who's going to provide that, right? Like, are our kids going to do that? They're probably adult children with families.
Yeah.
Are they going to give up their jobs? Do they even live in the same city? How is that logistically going to work? Right, exactly.
The part of this is to take away the fear factor. If we can do, you and I and others that we work with, do our job to just help people go, and I think you've already said this at the very beginning. By the time we get to the point that we've worked so hard to get to this period of time of being with our people and just enjoying life, if one of us is now dealing with something like with everything you're talking about, wouldn't you rather have the options to just be with your person, but not work for them?
Exactly. So it's and the verbiage I use is, don't you want to be a companion and not really a caregiver?
Yeah.
Right? Because don't you want to stay in that role as the spouse or the daughter or the son, instead of being, okay, I'm the physical caregiver here.
Yep.
Right? Because when you do that, those roles, you are no longer just the spouse, just the daughter. And that has there's significant stress there. And so if we can pay caregivers to do those mundane tasks, right? The getting dressed, the showering, the transferring, those bathroom issues, then your spouse, your kids, they can continue to be those roles and not caregiver.
This might sound awful, but early in business, we talk about delegation, being efficient.
Yeah, right.
So why wouldn't we want that for our personal lives?
That's right.
If there's an issue. So
yeah, that's exactly right. And so having a plan to figure out and a policy to figure out, okay, well, you know what? I've got this bucket of money that's designated for LTC, and that is what we're going to use, right? I am guaranteed this amount of money at this point in time and in the future to be able to hire professionals to come in to do this. So my wife doesn't have to do that, or my husband doesn't have to do it, or my kids. And so that we can really keep our relationship intact and healthy.
Right.
Let's talk about the different components of a long-term care insurance policy contract and what that actually looks like. So when people are considering coverage, what are the main things that they're going to be looking at? The first thing is benefit amount. How much coverage do I want on a daily or a monthly basis? Okay. And so that's typically going to be $2,000 all the way, could even be up to $15,000 per month that you can have coverage for. And then the second component is going to be benefit period. How long do I want benefits to last? From 2 years all the way up to lifetime benefits. How much coverage is going to be meaningful to me? And I think this is often sometimes difficult for people to choose. And so when we're looking at that, what I generally start out with is first we look at, family history. Do you have family history of people needing care? What does care cost in the area that you want to retire in? Right. You might live in Columbus, but maybe you want to retire in Arizona and be near Amber, right?
Come on down.
That's right. You want to have some warmth. So looking at cost of care in the area that you think that you're going to retire in is really important.
I think it's hard enough to know how much money do I want when I retire.
Right.
So you have to do a little bit of research to see location and the cost, generally speaking. And then I know you're going to get to the rising cost eventually. So we have to kind of look at that and build that out correctly.
Right. So those are the first two components, benefit amount and benefit period. The third is inflation. So this is going to help you increase your benefits over time, your monthly or daily benefit, as well as your total bucket of money. And so especially if people are younger, if you're under 70 years old, you need to consider inflation protection.
Right.
Or if you're around 70, you need to consider a higher monthly benefit without inflation protection. So it really depends on what the premium ends up being. But we want growth in our policy, when we're doing it at a younger age, because cost of care goes up. Yeah. It's just incredible. And especially with COVID these last couple of years, it's astonishing the amount that care has increased due to, lack of labor and so many shortages.
Sure.
And so
you're right.
So we've definitely seen a big increase in care costs over the last couple of years. But generally, we could look at between 3 and 5% that care costs increase year over year. So most of my clients that are under 70 are looking at inflation protection. So what this is going to do we generally look at like a 3% compound inflation protection rider. So every month, every year, and every, over time, your policy is growing to keep up with the cost of care. Yeah, to keeping up with the cost of care. So that's the third component that's really important.
Kelly, does that kick in immediately when you initiate the contract and you fund it? Is that going to start cooking inside the contract?
Yes.
So I bring that up because some of the audience listeners might have already worked with us on the disability side of things, and that inflation rider works a little differently. So what's interesting is we don't always sell COLA, cost of living adjustment, on disability contracts. A lot of times we do, but it just depends on variables.
Sure.
But it's rare to say, I think, that we would say go without it on a long-term care policy, typically, because of all those factors.
Right. Yeah. We definitely want to consider inflation protection on an LTC policy because cost of care continues to go up, and it's really important thing to consider. So the fourth thing to consider a component in a policy is the elimination period. This is the amount of time that you are going to self-fund your care costs before your benefits begin. Now, typically we see a 90-day elimination period. That's pretty standard. Sometimes we see a 0-day home care waiting period. So that means you're getting benefits right away at home. Now, if you then move to a facility, it's going to be 90 days. But usually, if you're receiving care at home for at least 90 days, that will actually credit towards your facility elimination period, which is nice.
That's nice. Yeah.
Very nice, because the carriers are recognizing that people want to receive care at home. That's the number one place people are receiving care and want to receive care. So they are creating flexibility in many of these policies to be able to do that. Now, that's not always the case. Sometimes it's just a standard, like this is what it is. And I think two other things to consider too with the elimination period is carriers can do it a couple of different ways. So they will look at an elimination period based on calendar days or service days, okay?
Like business days, you're saying.
Right. So the calendar day, that is going to be the quickest, most really preferred way to have an elimination period counted, because they are literally looking at every single day that after you've qualified and triggered your policy, every day that passes will count towards your elimination period. You don't have to receive care every single one of those days. It's every calendar day, okay? Versus a service day elimination period, they're only looking at days that you're receiving care, okay? So if you're receiving care 3 days a week, it's going to take longer to fulfill your elimination period, okay? And then we have a carrier that will actually do almost basically, if you receive care 1 day a week, they're actually going to count it towards a full 7 days. So carriers differ in how they do that, but it is important to consider when you're looking at policies, how does my insurance carrier, how does my policy count the elimination period? You know, what inflation options do I have? What's my benefit period? And how long, how much do I have per day or per month? Those are the 4 big things.
So as you talk about days, it makes me think of things that I know about lightly about Medicare days. You want to talk about that a little bit?
Yeah. So a common misconception about LTC is that Medicare covers long-term care. It does not. Medicare is not intended to cover long-term care, extended care services. That's not what Medicare is for. Medicare is intended to cover acute medical issues. Now, when do they kind of overlap? Why do people think this? It's because it will do it on a short-term basis, okay? When you need skilled care. Now, it will sometimes provide custodial care if you also need skilled professional care, okay? So what Medicare will do is they will say, we will cover the first 20 days in a skilled facility. After 20 days, there's a copay, and you will pay that copay. But once you get to day 101, so first 100 days, there's some coverage. You get to day 101, no coverage, okay? And that's for skilled professional care. This is not informal, custodial, non-medical care. These are different things, okay?
So let's break that down. Skilled care, where am I going?
Yeah, so typically skilled care is going to be received in a skilled facility. So a nursing home, possibly a rehab facility. So these are places where you have professionals like nurses that are providing this care on a day in, day out basis. You might be receiving physical therapy, occupational therapy, speech therapy, those types of things, along with maybe you need custodial care with activities of daily living like transferring, toileting, bathing, dressing, eating, incontinence. But skilled care is really going to be professional, more medical care. Now, the non-medical custodial care, that's really what most long-term care is. Help throughout the day with those activities of daily living or supervision due to a cognitive impairment. So
but you're in your home, usually.
Right. Typically people, when you're receiving long-term care, typically people are in your home. Now we do have people in nursing homes. Now, oftentimes those are people that are on Medicaid, which is different from Medicare. Okay. Medicaid is a government program for those that have low income, low assets, and there's a spend down. That's a whole nother episode, but
yes,
those are basically the poor that they don't have any more money to pay for their care, and they are receiving care in a nursing home, okay? Different. Most people are not receiving care in a nursing home. Most of my clients and future, they will receive care wherever they want, whether that's at home, maybe it's in an assisted living. We have a lot of really nice assisted living facilities now. I've heard some people say, yeah, it's kind of like going back to college. And, I've got my roommates down the hall and I've got community and socialization.
With assisted care, let's not confuse that, because there's not nurses walking around taking care of everybody all the time, like a skilled care facility, right?
So assisted living is going to be, it's another place where you can receive care. There's not as much hands-on assistance as you would have in a nursing home. Yes, you do have nurses, you have aides. A lot of aides are in assisted living facilities to help with activities of daily living and help with grooming and showering, all those things. But yeah, typically you're not having as much hands-on assistance in an assisted living facility. facility. Now, I've seen people have or be in an assisted living facility, and they even end up bringing in more care. So some home care agencies will even go into assisted livings to provide more round-the-clock care if the assisted living facility doesn't have enough staff. We've really seen that during COVID, where they have been short-staffed, and the care recipient needs more care than they can provide. And so the families will pay someone to come in to provide additional help, additional care. So they're getting the care that they actually need. So, but again, most people are receiving care in their home. That's preferred. But then sometimes, in the care continuum, you may need more help, and you may actually prefer that because often we see older adults get lonely, especially if you're at home by yourself. Yeah. It's one thing if you're still at home and you have a spouse. It's another thing if you're at home and you just have a home care provider. If they're not there 24/7 and you don't have people coming in and out all the time, friends and family, it can get really lonely and depressing. And we see this. So sometimes families
that
will
with
make
my grandfather. Yep.
Yeah. And sometimes it makes a lot of sense to, like this happened with my mama. It was like, we saw serious signs of depression in her. And so she was happier in the assisted living. Did she miss her home? Absolutely. Like she talked about wanting to go back, but she had community.
I think when you can have some choices, it can help you still feel in control when you're losing control sometimes and it's out, it's not your fault.
Right.
So the Medicare though, back to that. When you're talking about assisted living, that's not what we're talking about. So there's this whole misconception, but when you plan, you can decide where you want to be.
That's right. That's right. You're staying in control of your care options when you're planning for extended care. You're choosing, and when you have a policy, the insurance company doesn't say you have to receive care in this facility. No. That's the idea is you are receiving care where you want, and then your benefits are going to pay out wherever you choose to receive care. And I think another important thing to talk about is how are benefits paid out? And really there are two ways benefits can be paid out.
That's a good one.
The first way benefits can be paid out is cash indemnity. So let's say your monthly benefit is $5,000 a month, and that's the coverage that you have at that point in time. Okay, maybe you've had some growth in the policy. Or maybe, in 10 years, it'll be 10,000, whatever the case may be. That carrier will pay out that monthly benefit, just send you a check. Okay. You can do whatever you want with that check. Okay. It's cash. So you can pay an informal caregiver. You can pay a spouse. You can pay a family member, a friend, a neighbor, a home care agency, whoever you want to be able to provide that care. Okay. It's just a check. You use it how you want. Versus reimbursement, which is the more common way that policies are paid out. And that is when the insurance company will say, okay, your benefits are $5,000 a month, but your care costs are actually $7,000 a month. We're only paying you for your monthly benefit, your full monthly benefit of $5,000. So they are going to reimburse you. You're going to pay for those care costs up front, and you will submit invoices or receipts, and the insurance company will reimburse you for that up to your monthly benefit, up to that $5,000 or whatever your monthly benefit or daily benefit is, okay? So you cannot pay informal caregivers with a reimbursement policy. It has to be a professional. So it has to be home care professional service or a facility. Now, some people get a little like, oh, well, I want cash, right? Because cash is king. I have flexibility. Well, one important thing to consider with reimbursement, yes, you cannot pay informal caregivers, but oftentimes home care agencies and facilities will do what's called an assignment of benefits. So you will sign a form that basically says we authorize the home care agency or the facility to do this on our behalf. So your family doesn't have to actually submit the receipts. They're just working directly with the home care agency or facility.
Yeah. So I want to pause there because that I think is huge. And I want to also talk about giving family members or kind of setting family members aside from these choices. So back to this, there's less bookkeeping. So cash is king, but you have to do the bookkeeping, correct?
That's right. That's right.
And there are extra who's going to want to do that.
That's right. And there are extra IRS forms that need to be filled out. Like your CPA definitely is going to need to be very involved here. So it seems very easy, and definitely the option to be able to pay informal caregivers is amazing, but there are other things that do need to happen along the way versus reimbursement. Of course, like there is, IRS forms to fill out for that, but it's a little less time consuming on the back end because you've got, a checks and balances, and you've got the insurance company double checking that this is legit, right?
Yeah.
Like if you need, let's say 30 hours a week, but the agency is trying to charge you 40.
Ooh, okay.
They're gonna say, oh, wait a minute. No, this isn't right.
Well, like a little auditing.
Your plan of care says 30 hours and they're charging you 40 hours. So something's not right here. So there is an extra checks and balances there. But then also, it's important to ask whatever agency, home care agency or facility you're working with, can we do an assignment of benefits? That's an important question to ask to see if they're able to do that. Not all will, but it is something to consider when you're looking at agencies and facilities and you have a policy.
I think the beauty sometimes with these policies is that when you build this in advance, just like your estate planner, the wills and trusts, it's taking it off the plate of the child. Even if your children love you and they would probably be there. When you can put a kind of a barrier between decision making, there's other children on your children's side, there's spouses, there's other family members that tend to get interesting, we'll say, when money is on the table, when there's some of these things going on. So if we can just put a invisible barrier around any of this other potential drama that you would never think would happen, things can happen. People can your children can have different marriages, illnesses over there, addiction, all these things that can pop up. This keeps it out, the noise away from your care.
It really does. Oh my gosh, absolutely. And definitely when a husband and wife, individual, whoever it is, when you have a policy, okay, this is giving you permission to receive care and quality care. If you don't have a policy and you are self-funding your care, okay, who is doing that on your behalf? Because most likely you're not going to be capable of doing that. Is it an adult child? How many kids do you have? What spouses are involved in this process too? There are a lot of eyes on that checkbook, let me tell you. Lots of eyes, right? Especially when they're considering the estate. How much are the kids expecting at your passing? And if they're having to write checks, are they going to be a little stingy in maybe choosing the home care agency or choosing the facility and say, well, this agency over here is only charging X amount when the other agency is charging $5 more per hour? When in reality, you really want and deserve that better care, but you have lots of eyes on that checkbook. And when you have a policy, and when you have a policy, it's like, no, like the insurance company is paying for it. Right now, there might be extra charges,
and
right?
Get mad about it.
Right.
Medical care, this is what we need. This is where things are going. They can't start counting things. And it's awful to think our family would never do that. But I know we have all these stories.
It's complicated.
It can happen.
It gets complicated. There's so many emotions involved. Like when there's an extended care situation, it's so hard to remain indifferent and to remain just really logical because it's so emotional. It really is. Because you've got a loved one that needs care. You do want the best for them. Most often, your family members do want what's in your best interest. But especially if this is like a really long-term situation, maybe it's 5+ years, and that checkbook, those accounts are dwindling, quickly. It's, oh my goodness, what are we going to do? Right? We have to cut corners. We have to cut corners.
Because that inflation rider's not there. There's other things that are not there. And so, the last few years, you don't know what the economy is going to do. We don't know. So take and I think you talk about risk and consequences with your clients. Take the risk off the table by looking at it from, be forward thinking about it.
Yeah, absolutely. Let's reduce that. Let's reduce the risk, reduce the consequences, transfer that to the insurance company, come up with a plan of how are we going to pay for it? Who's going to provide it? Where do I want to receive care? Talk to your family about it. Talk to your spouse about it. Talk to your adult kids about it. They deserve to be in the know. You know, like
Absolutely.
you are going to make the decisions as the parents of this, but ultimately, but you need to include your kids, because if you expect your kids to provide the care, but they have no idea, what kind of
people live all
pickle
over
is
the
that going to
place
put them
now.
in? Exactly. Like, are they logistically going to be able to do this? Do they want to? Can they physically? Do they have a family of their own? Do they have kids?
Right.
They've got sports, they've got school, they've got jobs. Like, it's probably unrealistic to expect that out of your adult kids. So having these conversations up front while you're cognitively aware and in good health to make the right decisions.
Thing to do. If you love anyone loves you. I always say, that's where this planning, if you have to do this for your people and for yourself too. And so maybe we could wrap up with talking about when is the right time, because most people deviate towards elderly people need this. I want to start the conversation earlier, because it could be for your own care, but it also could be are the children and the parents talking and educating themselves on, do we need to buy something for the children, or vice versa with the whole sandwich generation?
Right.
The conversation needs to start earlier, and not to be scared of that.
No, right. Don't run from it. Don't, hide from this. Have these conversations early and plan early. So what does early even look like? I mean, I have clients from really 40 all the way up to 70s.
Yep.
Okay. All in between. Now, the ones that are planning early, maybe they're 40, early 40s, they have a lot of options available. They have a lot of policy options available because typically they're healthy. And just because they're younger, they have a lot of options, and it's going to be less expensive. Okay. Versus you wait until you're older. Typically we tend to have more medications or more chronic issues that start to pop up as we get older, in our 50s and our 60s, and even definitely in our 70s, right? That's pretty common. So the older you are, the more expensive it's going to be and the less options you have. But even having these conversations, maybe at 40, you're not ready, but you can start having the conversation, right? You can talk to your spouse. You could even talk to your parents about this and see if they have a plan. Hey, mom and dad, this is really important to me. I think it's really important to our family. I think we need to talk about this. Like, do you have a plan for extended care? If so, what does that look like? If they don't, well, let's talk about it. Okay. But oftentimes my younger clients, Amber, like even in their 30s and 40s, they are looking at coverage where at that point in time, typically their main priority is life insurance. Okay. It's not typically LTC at that point. So what they're looking at is life insurance with a long-term care rider. And what that really means is you've got a death benefit and you're able to accelerate a portion of that death benefit per month, 2 to 4% generally, if you need extended care. Okay. If you need help with activities of daily living. So, but that main priority is life insurance. There's no extension of benefits. There's no inflation protection. It's really life insurance that you're able to access, okay, if you need extended care.
Yeah. And so we're not sure, but with certain legislation, some of the underwritten LTC riders are potentially a solution that you can use for some of the rules that are coming our way in different states. The other thing is it's a nice affordable rider, usually, to just add on to that life insurance. So you're just covering your bases while you kind of figure out, all right, do I want something more complex to cover all these things we talked about for this last episode? It's a good stopgap to have.
Right. It is.
Wow.
And I think also too, I think it's important for people to know these are permanent life policies with long-term care riders. These are not term policies with long-term care riders. So these are permanent policies that will last your entire lifetime, but you've got a rider on there for extended care, okay? Once my clients typically get in their 50s, that's when the LTC is more of a concern, okay? That sandwich generation, right? They might still, maybe they have high school kids, college kids still on payroll, and they're maybe taking
payroll from the younger and then the
that's
older.
Right. And maybe they're providing, that's right. Maybe they're providing care for parents. And so they know that this is a very, very real thing and they're ready to start planning, okay? 50s is really the typical time for most of my clients. And then I have clients clients though that have retired. They might be in their 60s or even early 70s, and they just hadn't planned yet. And so then we're looking at options, what's available. We'll look at a traditional long-term care insurance policy where it's like pure insurance, where it's like your home or auto. There's no added benefit if you don't use it. It's really oftentimes the most bang for your buck as far as coverage.
Sure.
And then we'll look at a hybrid policy where you are combining that pure insurance long-term care with an added benefit. And that's going to be a death benefit from a life insurance policy or cash value from an annuity. And there's an extension of benefits with inflation protection. So lots of options, but the timing of it matters. Yeah.
We have so many things now. So it's really, if you start the conversation early, look at where you are, and like with an independent brokerage, we can find certain things for you and really build that out. And then you just have the coverage that you need as you transition, as you grow up, and as your dependents might change. You never know what could happen. So always checking in with your team and looking at what's out there and what do we need as your life evolves. So
right. Yes. Yeah. Lots of options. And it's really important to work with an independent agent, someone that specializes in long-term care planning, because it is so complex. It really, it's like a whole nother beast. And so having someone that has lots of options, not just one carrier, lots of options, understands the industry, understands, what's out there, and a comprehensive planning approach is really
you want to
important.
customize it based upon your needs and not just this, like the cookie cutter one carrier option. Yeah, I agree with that.
Right.
Obviously we would, being independent ourselves.
Right.
So as we wrap this up, I will link up your information so people can find you. Is there anything else you'd want to say to close this up, to say, here's what you can do today, just to kind of give a takeaway?
Yeah. So I think to recap, plan now to live well. I mean, that's really the takeaway, right? Don't put this off until you need the care, because it's going to be really too late at that point. So plan early so that you can stay in control of your care options and make good decisions for yourself and for your family and your finances both. So I think that's a key takeaway. If you want to learn more, I do have a podcast, Steadfast Care Planning. And so I cover...
Celebrate that, Kelly. So yes. This just launched and we are excited, right?
That's right. Launched November 1st. And so my goal is to have conversations with professionals all along the continuum of extended care. So we're covering...
we'll talk more too about that. But I'll link up your podcast. Let's do that.
Yeah. And then our website, steadfastagents.com. So thanks, Amber.
Okay, Kelly, thank you so much for being here. I'm so happy you're out there helping people with this. And it's important, as we might feel overwhelmed, informed and overwhelmed. We have teams out there to help you guys. So thanks so much for being here, and thanks to the listeners. Have a great day.
Thanks, Amber.
Thank you for joining us on today's episode of The Amber Stitt Show. For more information about the podcast, books, articles, and more, please visit me at amberstitt.com. Until next week, enjoy your journey at home and at work. Thank you for listening.